Gold is signaling that. And gold usually will lead. So you may see, that $2,000 barrier broken, and then we start to move up to 21, 22. You got to remember, and I know you know this, I'm saying it for the audience, that gold is at an all-time high in many, many,
Mhm.
many currencies. It's just that everybody seems to measure gold in terms of US dollars. And in that case, it hasn't hit a new high and sustained it. But in the unlikely event of an all out financial collapse, silver will be the money of last resort. Gold will have too high a unit value to do everyday trading, but silver will be used as money again. And therefore, everybody should have some silver coins on hand.
David Morgan, a sound money advocate, discusses the Dutch central bank's preparation for a gold standard, bank failures, and CBDCs with Daniela Cambone. He emphasizes gold's potential to surpass $2,100, anticipating new highs in various currencies. In a financial collapse, gold and silver are seen as the money of last resort. Historical data suggests that silver performs well in a stock market crash if it is already in a bull market, while gold is likely to rise instead of fall during such crashes. David mentions the possibility of a gold or pseudo-gold standard, where a certain percentage of the currency is backed by gold. The Dutch central bank's acknowledgment that gold is the safe haven during financial collapse implies a lack of confidence in its currency's resilience. Indirectly, the DNB urges people to own gold for financial protection, potentially increasing the likelihood of transitioning to a gold-based monetary system. According to David's perspective, if a currency is backed by gold, the amount of gold in reserve should ideally correspond to the amount in circulation. In a recent interview, the Dutch central bank equalized its gold reserves relative to GDP to other countries in the Eurozone and outside of Europe. David argues that gold itself is a neutral element, but the effectiveness of a gold standard depends on the integrity of the individuals managing it. A gold standard offers stability with truthful representation of gold reserves, but susceptibility to fraud and manipulation by individuals poses risks to its sustainability. Join us as we delve into insights shared by David Morgan. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
The reason the central banks are buying so much gold, they set a record last year, most gold buying in, I think, 5 decades. This year, they're on track to do the same. And the reason is gold to the bankers are the money of last resort. In other words, if everything else fails, you go back to a gold or pseudo gold standard. It doesn't have to be a gold coin standard with 100% banking. It could be, as Jim Rickards has said many times, 40% or whatever, but at least it's
Right.
tied to specie, to gold that's been recognized as money for 5,000 years. So I think that's kind of a backup plan for a lot of the central banks. And as far as the Dutch central bank is concerned, Jan sees it differently, and he could be right. I pointed out in that previous interview that when and having lived through it, and you have to be about my age to have lived through it. I mean, I became a sound money advocate like age 11 or 12. But when we saw this rapid inflation taking place last time in the United States, gold took off. I had some contracts on it, $300 gold for December of 1979. I rolled them over into January, and in that month to the next month, it went from 300 to 850. So it rapidly went up, and this is when Volcker stepped in. And the point being is, if you took the M1 money supply versus the amount of gold purportedly in Fort Knox, you had a full 100% gold coin cover at $400 gold, and yet gold went to 850. So we had double what we needed in gold reserves to go right back to the Bretton Woods Agreement. But no one wanted to do that.
So,
No one proposed it. And so my point being is that, as he said in the article, if gold accelerated to a high enough price, you could go back to a gold standard, and then you'd have to lock it in, and that's the problem. Because every time you go on a gold standard, the human element comes into it, and they start printing more receipts than there are gold to back it up. That's why the Bretton Woods system failed. There's always enough gold. It's just the maintenance of keeping the gold standard. Gold is like a policeman on a currency. So if you put out currency in digits on your phone and it's a cashless system, as long as there's truth in the system and the amount of gold is equal to the amount of digits, you have a fair, equal, and one of the best systems that we've seen in history. The problem is, again, the human element, where somebody cheats and wants to get an advantage and puts out more digits than there is gold to back it up. Now you either have to adjust the price of gold or digits to gold ratio, or you are going to mess up the system. And this was what happens. in from the time of the early days when, there really weren't banks. There were just merchants that held gold in reserve and put out these receipts, and then saw that only 10% of the people came back to get their gold. They said, aha, I can enrich myself by printing up more receipts than there is gold. And then people catch on, there's a bank run. And they go to the gold window and they say, here's my receipts, give me my gold. And if you printed up twice as many receipts as gold that exists, now the fraud is discovered, and everyone says the gold standard doesn't work. No, gold is inert. It's an element out of the ground. It has nothing to do with anything other than, as I said, a policeman on the currency. But it's the human element that gets involved that can destroy a really sound money system.
The Bahamas, Jamaica, and Nigeria have already introduced CBDCs, and more than 100 countries are in the exploration stage. Central bankers in Brazil, China, the Euro area, India, and the United Kingdom are at the forefront. In most cases, it would be useful for countries to continue exploring CBDC carefully and systematically, as IMF Managing Director Kristalina Georgieva noted in her recent speech at the Singapore FinTech Festival. David suggests that gold's performance often precedes the introduction of new central bank digital currencies, predicting a potential proposal within 6 months to a year. He doubts the benefits being promoted, describing them as misleading and hiding the creation of a more controlling and restrictive system. Let's get back to the interview.
You can't really be outside the system. I mean, it's very difficult. There are people that are, meaning that they never have a bank account. There's I looked it up recently. I think it's 1.6 billion people on the planet are unbanked. And one of the subtleties to this CBDC is that the bankers want everybody digitized. They want everybody to have a real ID and be in the system, meaning their system. But I digress. There will be people that reject it, and there is a counterbalance to it. I mean, as I said earlier, you could be on let's say, gold-backed digital currency. Bitcoin is pretty anonymous. I mean, there's things that you can do to mitigate the problem, but whether or not that would have enough traction to outdo the bankers remains to be determined. A lot of people just aren't aware of monetary history or what's coming down the pike, and they will just automatically say, well, what's the difference? I use my phone to pay for everything anyway. I use Apple Pay or Venmo or one of these other payment systems. It's just another one. Who cares? So they won't see what's really behind it, that they want to basically track and tax you at every point of sale. Then they want that data to be used to basically control your life and tell you eat too much meat, you can't buy hamburger anymore. Yeah, but I got $1 million in my bank account. We don't care. You still can't buy meat. You had too much this month. Not long thereafter, I'm going to guess 6 months, a year, you'll see the ultimate proposal of the new CBDC or something like that come to the fore. And, there'll be a huge sales pitch on why it's so good for you and no one can steal your money and you never have to worry anymore. Your real ID system is going to prevent anybody from hurting you, and you have security like you've never had, and on it'll go. But of course, it's really a prison system. Look at what happened to the truckers with Trudeau. I mean, it didn't matter if you were on a CBDC or not. You still got your bank account shut down if you were doing a peaceful protest against something where the people have a right to voice their opinion, and yet they close their bank account.
Choosing gold specifically, and not any other commodity as a basis for the new currency system, is meant to leverage gold's characteristics to realize stability in the currency's value. When a currency is backed by gold, it is possible to convert it into units of gold, as in the Bretton Woods Agreement, when the dollar price was pegged at $35 per ounce of gold. Do you believe a return to a monetary system backed by gold is possible? Share your thoughts in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.